Welcome back to the channel. As always, if you copy trade, then you are an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to cover today a stock called Dollar General Corporation, ticker DG. It is a stock that I successfully shorted back in 2024. I think I may have covered in the channel previously. And as you've seen, it has been in a long downward trajectory for quite a while. However, it has been picking up over the last couple of months, despite the market being in the turmoil that it's been. And why is that? Well, we are seeing starting signs of moderation, which is one of the issues that the company has been struggling with for a while. What led to this massive drop in the stock price was issues with, of course, inflation, but also rising labor pressures, problems with their inventory, so the shrink, a lot of theft in their inventory, and also in-stock problems, right? So management has addressed some of these issues, and there were in the last earnings report a few positive points, aiming at, for example, the improvement on shrink that already improved the performance. And inventory issues have also been addressed to an extent, although still need further progress to be completely dealt with. Nevertheless, if we look at the macro environment, it's really not looking good for companies in the retail sector. So if we look at the University of Michigan Consumer Sentiment Report, we see that it has been going down, and I think the last one is not actually showing here. Uh, it presented recently an all-time low, even prior to the 2022 lows and the pandemic. So the retail consumer is struggling a bit. And the retail sales report was also pretty weak recently as well. So all those things lead us to believe that the health of the consumer, especially at the bottom end, which is the audience of this type of company, is struggling. Now, as a matter of fact, the CEO in the last earnings call did address this in detail. So he pointed out at the weakness of the customer base, citing their worsening financial situation, needing them to sacrifice on necessities. So management is aware about the difficulties of their consumers. Nevertheless, the stock has been, since then, they reported on the 13th of March, rising despite the market experiencing wild swings to the downside. And additionally, the company recently announced the intention to shut down 141 stores. 96% of those are the standard Dollar General stores, and 45 are pop shelf, which is a concept that they have been struggling with, more related to homeware and home decoration. Now, that alone is not a significant number. It's about 1% of the total stores of the more than 20,000 stores that they have. However, this is where it gets interesting for me because they expect to also open 725 stores in 2025. So for example, here, this was announced. They expect to have 725 new stores by 2025, despite closing 141. And to me, that announces a bit of a back and forth seems a bit of a unclear direction for management. But I think the issue lies in one of the problems that they're still experiencing, which is inventory. So at the moment they have almost 7 billion in inventory, which to me is significant because the total assets are of 31 billion, but that's counting things that uh, are not part of their current assets, right? So property, plant, and equipment, and so on. So to me, that signals desperation from management in terms of really trying to get that stock out of the way now that they seem to have fixed a little bit their supply chain and their issues with stocking. Um, but certainly raises an eyebrow for me in terms of what management is doing. Now, like I mentioned before, the stock has been performing all right. Tariffs have not eroded the stock price yet. And I think part of the reason for that is that the company is estimated to have about 10% of its sales outside the US. So this is probably a stock where some investors may have seek refuge. Uh, they have been getting exposure to, avoiding that downside of tariffs. But we're getting to a point now where the market doesn't seem to be getting too concerned about this anymore. So if we look at, for example, the performance of the S&P recently, we see that it has recovered plenty of the lost ground. And this is something that um, we could see continuing. We don't know at this stage. But one thing seems certain with this one. There could be impacts going on from tariffs that have simply not materialized yet in the stock. So the fundamentals have not necessarily changed. If anything, they have worsened because, like I mentioned before, retail sales and consumer health are deteriorating. So this to me creates a situation where there is a disconnection between the price and the fundamentals. So if we look here at the valuation, we see that the company, that will make it easier. So the multiple's about 17 times now, and it was at basically 12 not long ago, right? So the valuation has rallied in a relatively short space of time. But at the same time, the 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 backdrop, the macro backdrop, has even worsened. So I see a bit of a disconnect here, and that seems to be the case as well when we look at the price target, right? So we trust the price target from the analyst, we see that the price target is basically aligned with current price. But what we also see is that in previous occasions when this has been the case, periods of downside risk have normally come after. So that happened here back in late 2020. It happened here in August 21, in January 22, April 22. So I do see that the fundamentals in this stock do not justify its current price. So that is a compelling reason why I started looking at this company. However, there are more reasons which I think pose further downside a little bit down the line. The company is highly dependent on Snap. If I switch to a different tab here, you'll see that the Snap program, it's basically a program for food stamps, right? For low income families to get access to food and drink. Um, And the Trump administration is proposing changes to this program. This was announced a while ago at the beginning of the year, but there have been significant announcements over the last few weeks that signal that further announcements could be taken. So, for example, the new budget, which was approved or passed by the Republicans on March 11th, contains instructions to cut as much as 230 billion across USDA programs, right? And that's scope of snap. So from that, we don't get any specific figure as to how much it could be cut. However, we know that in the previous Trump administration, it was somewhere around 20 to 30% in terms of actual cuts for the program. Now, why is that relevant to a company like this? Well, they do have many of their customers buying their products through this program, and it is certainly critical for them because they have recently announced um, the distribution channel for them to sell their products through writing apps through this program. Okay, so it is definitely significant. Now, it could not be just actual cuts into the program. It could be simply changes to what the program actually is and how it's delivered to citizens. So something that we could see is, and it's something that was tried before by the previous Trump administration, changes in requirements for eligibility for the program. So we could see changes in who qualifies, but certain products, for example, by the health secretary, right, have been pointed as being banned from the program, things such as soda, right? So the intention from the Trump administration is to steer citizens towards more wholesome foods, right? So we could not only see cuts, we could see, for example, it was said here, changing the actual program and request waivers that would bar food and soda and other processed foods. So those are basically products that you cannot buy at Dollar General. They want to encourage taxpayers to go toward wholesome foods such as whole milk, fruits, vegetables. Those are not the kind of products you can buy at Dollar General. So if announced, I think this could have a big impact on the company. Now, something I found quite interesting is that I mentioned before that the fundamentals seem disconnected from the price. And something that caught my eye is that both the market and the company itself, I believe, are discounting the possibility of this administration efforts going further, right? They mention specifically that they don't contemplate changes to SNAP or any other benefits programs in their guidance. So that I think validates the point that if announcements or changes were made to any of these programs, it would severely impact the stock because it's not being factored into management guidance. So some states, such as Arkansas and Indiana, have both formally requested permission for USDA to limit the purchase of soda and candy already. So that is 2 states already. So that seems to be getting quite a bit of traction. It's been in discussions since the beginning of the year, but some of the articles that we just alluded to here were as recent as last week. So I would expect to hear more news in the medium term. In the meantime, we do have further catalysts. We have more University of Michigan consumer sentiment reports. We have more sales reports, and it is yet to see if the tariffs will have a material impact on their operation. So the way I'm going to structure this trade is as follows. I'll structure it going long the 15th of August, 90 strike puts. The price is currently 93. I'll buy those contracts at 650 and I'll sell one June contract, also the 90 strike, at 480. And assuming that the stock gets to 70 by then, that would give me with a 2-for-1 ratio. If we reach that level after the expiration of the short leg, it would give me also an almost 4x return, which I can restructure in a vertical for a much higher return, reducing my risk. Hope you enjoyed the video. See you soon.